morning, everybody. Welcome back to another week, another live. Twice this week I went live. This is Brandon with Crypto Trades and Tech. My camera is off. Good morning. So, as usual, we're going to surf our way to a van by the river after we lose all of our money. This is not a financial, I'm not a financial advisor, so please don't take anything you hear here as financial advice. This is simply my observations of the markets, and if you end up taking trades blindly on anything you hear here, you'll end up losing all of your money and living in a van down by the river. That said, welcome. Good morning, everybody. I got a smaller group this morning. We'll have hopefully more on the replay crew. Alan isn't here with us today. I'm sorry about that. It's probably why there's nobody here. But Alan, he's not feeling well, I think, after his trip. He took a trip. I want to say how what's the name of the place? Anyway, he took a trip, just got back, and he's not feeling well. So we're going to give him another week. Last week, I didn't get to go live, so we're going to have a several-week break here. So the markets hopefully can actually go up a little bit before they crash the next time we go live. I'm trying to look at where, was it Beijing he visited? I guess it was just Beijing. That's in the right area. I thought it was something else. Anyway, so good morning, everybody. We got some stuff to talk about here. Bitcoin is being boring, as is Ethereum. Well, Ethereum's a little more exciting, right? Ethereum at least broke its all-time high, but it's coming back to it. You get this top trend line here coming into. We'll talk more about that. Why are these taking so long to break out? Elrond is out of its all-time high. I highlighted yesterday that it was a valid breakout because it closed a daily above the prior high here. So a daily close above that's a really good sign for probable continuation. It's also highlighting to some people in my Discord where I anchor my Fib extension levels, and those anchors are based probably more on like the 3-day or the weekly, because this invalidates it. All right. But today we're going to talk a little bit about, I'm starting to go on the hunt for small cap altcoin gems, and I put out this tweet and I got overrun with good responses here. Got one from a developer support team from Nexus. So I added that to the list this morning here. I haven't really read much about it. And this came in, for my time, almost 4 a.m. So I didn't see that until I just went live earlier. But I did look at it before I went live here for a second. And they have some pretty bold claims. So we'll see if they can live up to those bold claims or not. I also had several people comment MVP, which is this Multivac project, which is, what was the name? They said it was they use this, not infinite sharding, but some type of special sharding approach. Hold on. I want to look it up for you. And an ALF is a very small, or it's MTV. Did I say MVP? It's MTV. I think I might have said in the video notes. I don't know what I said. Yeah, I keep putting MVP. It's MTV, like the music video. Oh well. I'm gonna update that. So Multivac, this all-dimensional sharding. I don't know what that means. I started to read up on it. It's some very all-dimensional sharding. It breaks through limitations of blockchain scalability by developing the world's first fully sharded blockchain with shard transmission and storage. So they claim to be doing some special things with sharding. The only problem I have with that is Elrond has been doing this for a while, and they have a significant lead on them. So what I have yet to uncover is what makes this special from, say, Polkadot, which it has 128 fixed shards called parachains, or Elrond with this adaptive sharding. They can scale up and down sharding. So we'll as I dig into this one, I'll let you know what I find. But this is MTV music television from the 90s. I don't know how advanced it can be if it's music television from the 90s, guys. Really. All right, let's look at the live stream again here. Check out Rari. So today we're just probably going to talk about a lot of small caps because, Bitcoin's kind of boring. Although it is starting. So here's my concern. Let me just start with Bitcoin. It's kind of the gauge of where we're at in general. My music is still too loud. So let me show you this here, just a good clean chart. That'll work, clean enough. All right, my moving average is, I'm just really watching the 20 right now. If we close below the 20 yet again, I'm gonna start to be, I don't know. We need to, it's holding it. I mean, it's holding the 20 currently. But if we close below the 20, what I'm really looking for, a close below, you know, a move down, come back up into it, and then curl over. We haven't really had that action. Every time it goes under, like over here was the closest we had. It started to want to curl over, but it actually would have given kind of a bit of a weak signal here. It gave us that flush out right after, that really big flush out to 58,000, and then it retook it and continued, right? So, but this was the most concerning price action I've seen yet in relation to an early warning on the 20. I think it's where I trimmed some. I'm not sure, but anyway. And then now it's held the 20 pretty well. So it's wanting to hold the 20-day moving average, but we'll see if it continues to hold. You see here it's starting to do. If I just draw a line right at where the 20 is, just, you know, it's right through here roughly. Make that purple. So you can see the price action. We're starting to get that 4-hour drop below, a couple of 4-hour closes below where the 20-day is going to come in at today's close probably. And then some curling down there. Good morning. All right, so this is my first warning sign that Bitcoin's wanting to roll over. Here, getting back to let's look at where we're at on Bitcoin. My biggest concern continues to be funding. And as you see here, the funding rates, at least on the bigger exchanges, namely Binance, isn't too terribly bad at this moment in time. But, sorry, I moved this off my screen. Back to our funding rates. There we go. But it's starting to tick up. So as price is sliding downward, this continues to tick up. Ultimately, to me, what this means is that there's not enough real buying volume. So I offset that by looking at volume, right? So here's the volume profile for the last 7 days. And you can see volume is actually... We had a nice spike in volume here on the 3rd. Was that a buying or selling moment? Let's take a look at the chart real fast or double check that. I think that was a big sell. 3rd, yeah. That was yesterday's big spike down. So the volume came from selling, not from buying. Right? So, yeah, the volume profile is not looking too terribly great. It's kind of just, it's pretty low volume right now. So if I go back, say, 30 days, you can see here we had a lot higher volume early in October. Let's move this to the daily from the hourly. So you can see the volume it's ticking up here the last 3 days. But what was price action been doing the last 3 days? So volume is up on these these 3 candles over here. But that's a little bit up. Let's go back 6 months and show you what like a lot of volume looks like. So this was the big sell-off, I think. And then early this year, take a look at the buying. This is what we want to see come back into the market. All right. So late last year, this was all the buying that was happening. Was this the early part of the sell-off? 315. The biggest volume days we had were 312, 314, somewhere in that range. Let's go take a look. January, February, March. These over here. So that's good. Is that right? January, February, March, at 3. That's good buying volume. If we go back, this is 12. Never mind. This is 2020. So early. This is the selling. That's the big spike sell. Sorry, I was looking at. Yeah, the bigger volume came in. That's right. So it was early 2022, January. But you see how this volume was increasing all through here. So if you look at last September, you had a bit of a spike over summer. These were, I think, selling spikes. And then you had the low, and you had the buying pressure come in. So you see the buying profile from last October and November. See how much buying there was? You see the buying profile now from this September and October. It's actually down. So we had an increase in volume, an increase in buying. So last year, remember September, October, when price started to go up, we started to see rapid price appreciation with quick pullbacks, which is what you want to see when you have momentum and you're heading in the right direction. So that buying volume. And so we were less concerned about things like the futures funding rate over here because there was good buying volume to support it. And what was happening is that funding rate was chasing price up. And the funding rate would get overheated, price would get overheated at the same time, and then it was very predictable that both would come back down. And then price would start to ramp up and the funding rate followed. What's happening now is price is declining and funding rate is picking up. That's not healthy. That means that there's more whales, large holders selling, and retail is the one propping up the price by buying on leverage, which is just a recipe for a big shakeout. This is what happened over here in September. Price was rising dramatically, but the volume died over here, right? There was a lot of volume here, if I recall, but volume died, and you can see this kind of this rolling action. Volume was dying all through here, and there was just leverage the system was getting levered up big time. And when it broke to the upside here, I thought, okay, maybe we have just a profile like this. I wasn't seeing quite the volume, but leverage is kind of following price up, and I was waiting for something to snap one way or the other, and it snapped to the downside. This was a culmination of very low volume and very high leverage. So the problem that we have right now is that we're in the same kind of general situation. We have really low volume and we have really high leverage. So, I'm not calling for a big September sell-off, but everybody needs to be aware of where we're at and what's actually going on with the market. It is not the same as it was last year. Last year, again, back to late 2020, you see the volume picking up dramatically, all that volume. And leverage, well, I don't have a live leverage chart from back then, but the funding rate, I guess I do over here on Glassnode, but the funding rate was rising on the back of high volume and prices rising. It wasn't rising on declining volume and declining price. So that's a bit of just a red flag, by the way, for where we're at with Bitcoin. And it's starting to kind of give me this these vibes over here of this kind of curling over action. Now, of course, we curled over, we had our flush out, and then we resumed higher. So let's color everything I just said with that reality. So we peaked at 53, sold off to 39, right? That was kind of a rough sell-off. But then we resumed up and took back out this high. So the more fundamentals, if I go look at, here's our perpetuals funding rate from the last couple of weeks here. You can see that when we got really overheated over here, we had a really bad sell-off. It lasted, not bad sell-off, but from the 20th to the 27th, we went from 66,000 down to 58,000 after leverage got overheated. So same kind of thing. Leverage is similarly overheated now. Price has been declining. Now, yesterday we had a small wick that took out a lot of leverage, so it brought this candle down, but leverage is rising again now. It's not quite to this level, but it's starting to rise again, and price is slowly falling. So just keep that in mind. But on the other side, here it is, exchange volume. So coins held on exchange continues to fall precipitously. So at some point, this game that we're playing of prices slowly declining into high leverage and then leverage wipeouts. It is my opinion that this game that we're playing right now is the last stages of accumulation before the market lets things kind of go for a bit and lets price actually rise. So this feels to me honestly like manipulation of slowly dumping into the market, causing price to decline while retail buys on leverage, and then wiping out that retail leverage to add fresh liquidity. And it feels like games to me by some of the bigger players trying to attain the largest positions possible before they head into distribution. So obviously this was all accumulation. This feels to me actually like the last bit of accumulation for another big move. So you can think of it, over here we had a lot of games that were being played to try to accumulate, right? You could see it. We were all going, what is going on with this big drop and how the price was acting weird. And then the last little bit of accumulation was right here. And then we had a big drop and then a big rise. So I'm kind of personally feeling like we're probably in a situation like what you see right here. This was also to the prior all-time high. I don't have it, this particular chart, this Binance chart didn't show it, but the prior all-time high was right at 20,000, right? And so we were coming into that, fighting with that, and then we had a big blast off God candle breakthrough. So kind of feels to me like where we're at maybe. But okay, man, CZ Binance confirmed Glassnode is not trustable data. I mean, the biggest exchange confirmed Glassnode is not reliable. Well, there you go. So we have to look at, so as far as this data goes, Glassnode's not reliable. That means that CZ knows that they have wallet addresses that they have coins in that Glassnode doesn't know about. That's what that means. And so that's been a suspicion for a long time by a lot of people, by the way. So it's not like that's anything new. But you see here, Binance shows a really large amount of coins on exchange, whereas everybody else shows this precipitous drop of coins on exchange. But what we don't know is how well Glassnode is connected to these other exchanges, and if they just simply don't know about other wallets that are on exchange, right? Some exchanges are more transparent than others, so. But good comment. Thank you for bringing that out too. How reliable is Binance? Yeah, that's the thing. I'll also take that with a grain of salt. In regards to mining Bitcoin, can you start and stop the machines during the process? Yeah, sure. I go and plug mine all the time. If there's a problem with them or something, or power issues or whatever, I just turn them off and then turn them right back on. I mean, they hash, millions of hashes per second. So, it takes them a few minutes to boot up, and then once they're booted up, connected to the pool, they just start hashing away. So it takes them about 5 minutes to come back online fully, get connected to the pool, and start hashing and generating revenue. If you're connected to a pool to generating revenue, right, because you're just sharing the rewards that come out of that pool, you're going to get paid pretty consistently. If you're mining by yourself, of course, that's a very different game. All right. So we'll see. The funding rate, by the way, isn't dire or anything. We've got one. Bybit's a little bit extended over here at 0.8. That's pretty bad. Anytime it gets above 0.4, I start to get kind of cautious. So that's just where I'm at on Bitcoin. But another good news, Ethereum's still, I think, technically on the all-time high. Of course, we had Elrond here. It's been just on a rampage. Is Litecoin looking like it's going to finally make a move here? Litecoin is slowly but surely inching its way up. Ethereum's looking good. So the algo can stop halfway through. Jack, it's not like an algorithm that's running. It's literally, it downloads the mempool. That means all the transactions that are waiting here. Here's a live public mempool. This is not my node's mempool, but so this over here, you see these blocks on the left over here. These are all the transactions that are waiting to be confirmed. You see here in the mempool right now, we have 26 megabytes of usage in the mempool. So the mempool normally on most nodes is between 250 and 300 megabytes. So this is all the transactions that are waiting to be confirmed. They're sitting in the mempool. And so what the miners are doing is they're organizing all these transactions that are sitting in the mempool, waiting to be confirmed in a certain way. And they have this random number called a nonce. And what they do is they cycle through a Merkle. If you go study up on what a Merkle tree is, but they take all these transactions, they organize them in something, or the ones that they're going to put in a block anyway. So they take like the highest, minor tip transactions typically, organize those in a block, organize those in something called a Merkle tree. They hash the root of that Merkle tree, and then they run. It's a 32-bit 4 billion combination number against that, and they hash it out, and then they see what the hash result is. And they're looking for a hash that has like a bunch of leading zeros. And it takes trillions and trillions of tries across the entire network for one person to find that. It's called terahash. Trillions. 1 second. Sorry. So when a miner comes online, all he does is downloads this 27 megabyte, mempool. So he just needs enough time to come online, connect to the network, connect to his pool, whoever he's going to connect to, and then download this mempool and start hashing. That's it. And so he does millions and millions of hashes per second. So like if you kill the miner, he might be in the middle of one hash that was going to take nanoseconds. So yeah, you just stopped, him from hashing that last hash that was going to take him a few nanoseconds to hash. He calculates millions of those transactions per second, or millions of those hashes per second, looking for the one that's going to work. Okay, so yeah, it's not any big deal. Electricity is expensive. Yeah, my electric bill has tripled since I started ramping up my ASIC mining. And I had a pretty high electric bill because I had a bunch of GPU mining. Dot USD, thanks. Let's take a look at Dot. We need to look at these micro caps. I got two more to look at here with you guys. Dot, it's so this is not the time to buy Dot, right? You should have bought Dot already if you were going to buy it. Now's the time to enjoy watching Dot go up if you have some Dot. Or if you have a huge position in Dot, congrats to you. If you have a small position in Dot like me, just sit back and watch the game. That's the show. Now, I don't have a big position in Dot because of where I think we're at with the crypto seasonality. However, if something unexpected were to happen and Bitcoin were to roll over, we could be experiencing alt season 2 right now. But I don't have anything else to say about Dot other than it's going up. I also don't think we're experiencing alt season 2. It doesn't feel like quite that fervor. Not enough stuff is moving big enough. But a few things are. Dot is in price discovery. So yeah, if you look at, I did this video a while back of my favorite blockchains. So we talked about AVAX and Atom and Dot as the interop chains. And then we talked about Ethereum, Cardano, and Elrond as the main layer 1 chains. And I said my favorite projects right now were Dot. The best investment anyway was Dot and Elrond. So that's working out. They're both in price discovery. This is versus BTC. Elrond USD is obviously over here killing it. All right. What graphic card do you use? I've got a combination of, I had some 1060s. I sold that rig that had the NVIDIA 1060s in it December of last year. I have a rig with a mixed with 470s and 480s. ATI 470s and 480s. And the 4 gig 470s, I retired about a year ago now and put in 8 gig 5700 XTs in their place. So the vast majority of my hashing power are 8700 XTs that I bought last year for $400 a piece. 5700. So ATI 5700 XT. Now what do they cost nowadays? I mean, they've just been, you can't get them anywhere. Let's just go find a random one here on, here's some pricing of them. Yeah, they come back down. So when I bought them last year, I've been mining on these cards for a year. I bought them at $400. They were at one point, the 5700s hit like $2,000. This is basically what my mining rig is right here. Basically that. I've got it's actually 6 5700 XTs and 2 480s, but cause I had a couple of 488 gigs spare, so I just mixed that rig as that. It's basically what my rig looks like, something like that. All right, that's my GPU rig though. All right, see back here. We need BTC to start the rally. 85K moving. It's hard to believe. So to answer your question, Jack, on do you make money after you mine? So I use something called NiceHash. NiceHash. Hopefully it doesn't take me to my, yeah. This is who I use. I just point all my mining power at NiceHash, and it's actually a mining workplace. I mean, a marketplace, so people can buy your hashing power. So what you're actually doing is you're actually selling your hashing power to anybody who wants to buy it to mine whatever coin that they want, and then you get paid in Bitcoin. So if I had a pet project, every once in a while, I'll have a coin that I'm like, you know what, I think this coin's going to do really well, and I will flip my miners off of NiceHash onto that specific network. The last example I have for you was Ravencoin. I thought Ravencoin was going to do pretty good because it's GPU resistant and all the stuff about ETH 2.0. So I flipped my rig from NiceHash over to dedicated mining Ravencoin for a while, and then when Ravencoin kind of topped out, then I flipped back to just doing NiceHash and getting my yeah. So Ravencoin's at 14. I haven't looked in a few days here. I started mining Ravencoin over here. You guys, I talked about it. No, over here. I talked about it sometime. It blasted off after I talked about it. Oh yeah, it's over here. So I started mining in the summer. I started mining Ravencoin. So let's talk about Ethereum 2.0 right through here, and then I quit mining Ravencoin over here when I sold, and I flipped back to NiceHash. That was August. Yeah, I bet that feels about right. That's about right. I might have waited until it crashed over here. So I'll do that every once in a while. I'll point my rig, my GPU rig, if there's a specific coin I want to mine, because I think the technicals, like here's what I was looking at, like being a TA tech person. I was looking at this, right? And when I saw that we were putting in a bottom here, after we kind of broke back above this, that's where I started like, all right, I'm gonna start mining some Ravencoin all through here. But otherwise, I used to use NiceHash. So what happens? So Ravencoin, I don't get paid until I actually find something, right? I was mining straight on the main network, and I would randomly get coins in as I found hashes that worked for that, that POW network. But with NiceHash, I just consistently get a stream. I just get paid for my hashing power, basically. So I'm just constantly, every 2 hours, actually, I get a little notification on my phone that you've been paid a little bit more Bitcoin. And so, and they use the Lightning Network. My Lightning node is connected to NiceHash, so I take my payments on the Lightning Network, typically. Right now, I've got a pretty decent balance built up with NiceHash. I need to take my payment and open up some more channels, probably on my Lightning Network, but my Lightning node. But NiceHash just pays you continually. So like every 2 hours, I get a little bit more Bitcoin deposited into my account, and it continues to build. And then, like I said, about once a month, typically, I take those coins off of NiceHash and put them on either cold storage or like maybe some I put on my Lightning node or whatever. All right. So we're talking about random mining stuff here. We need to get back to interesting questions. Somebody asked, though, we need the Bitcoin rally to get started. I don't think, I've been pretty vocal about this, I do not think that the end of the year price targets are going to work out. I just don't. Let me show you this chart. Though, that said, I worked on a little bit more of a different chart yesterday. I don't think these prices are realistic, but I can't deny the symmetry of prior cycles. I also am not going to go back on when I said, earlier this year, that if something fairly drastic were to happen and market participants all decide that Bitcoin is worth a lot more, it doesn't have to be until. I keep seeing comments like, where are these trillions of dollars going to come from to move this market cap? As of right now, today, the way that the supply situation is, we do need some buying to help start moving the price up, but we really ultimately need people not to sell as price starts to rise. That's what it takes, is you need some buyers, but you don't need a whole lot, really. You just need some buying and a lot of conviction on the sell side not to sell, right? And so what happens is if we have enough conviction on the sell side and people don't sell, and there's willing buyers that continue to be willing to buy at these prices because of the hype and the FOMO and whatever else, price can do stuff like this. It just can, because of the way the supply-demand dynamics works. If nobody's willing to sell, then price will just keep surging upward looking for fresh sellers, because we have a very low available supply right now of coins that are just readily available to sell. The order book on the sell side is very, very shallow. So it can technically do stuff like this, but here's what I've got here. From the July low, which, the CTM models are all based on the quote-unquote mid-cycle dip, which I also think, by the way, is invalid. I don't think measuring from the mid-cycle dip is valid this cycle, because it wasn't a mid-cycle dip. This was like a full accumulation. A dip looks like this. Hold on. This is what a dip looks like. This is a dip. Like, a small little lake in here. This is a dip. By the dip, you got constant momentum upward. You see that curve? You can just draw that curve. You never really lose that upward sloping parabolic curve. That's a dip. This is not a dip. This is why I don't think it's valid to measure from the mid-cycle quote-unquote dip, because you can see there was definitely a curve, and then we lost it right here. And when you lose that, this is you've lost momentum, and you have to now regain momentum. So we lost momentum right here, and then obviously you saw that play out, and then we had a whole accumulation. This is not a dip. This is a different phase. Now this is, going back to 2013, of course, we'll look at 2013 did something similar to this, of course. Let's go look at BLX, log. Go back 3-day, go back to 2013. All right, so was 2013 just a dip? Not really. We had a blow off top, we had a complete sell off, and then we had a time to reaccumulate and rebuild momentum, and then we had the peak of 2013 over here. But when you really zoom in on this, you have a couple of distinct This is another peak over here. You have a couple distinct things. This was the 2 peak, right? Okay, so yeah, this was it. This was the 20, so it's 20, way back in 2011. Zoom in. I'm on a 3 day, so it's looking a little bit weird. If I go to the 1 day, great, I just messed it all up. Let's go back over here. Let's analyze how this all played out, right? So the low, this is a very pronounced peak, right? And so, you know, the same general thing, you could have drawn like a uptrend, but if you take a look at this kind of broader, now it makes more sense, right? So you had this price escaped a very short-term peak. It was above, let's see here. This was a week, maybe? A week it was in these type of prices. For the most part, though, it was in this area. So this was just a lot of consolidation. This was a dip, per se, if you look at it on this kind of broader time frame. Now, let's go back to our current cycle. I'm going to have to clean up all this mess later. You can say, of course, then if you go way back over here, that you have this very, you know, whatever, and price got away from you. So that's where I can see the similarity to 2013, right? I don't call this a dip. I call this a first top, reaccumulation, rebuilding momentum, and you're looking to rebuild momentum, and then maybe you have a second top. Everybody's looking for a blow-off top, though, but the first top that we had, if you're looking for 2013 to repeat, you have to stop and think, hold on, wait a minute. 2013, the pattern in 2013 was a ramp up, and then after the halving, it really started to ramp up. Price got away. It did a blow off top. This is clearly a blow off top. Look at that price action. Just straight up, blow off top. A reset, a retrace. This is more of a retrace and then consolidation, and then a second blow off top, right? All right, so that was really strong price action, blow off top, accumulation, second blow off top. So if we're looking for 2013 to repeat, then what are we looking for here? We had a rolling top, reaccumulation, and I would contend that then the next peak is going to actually be a rolling top. Right? That's my contention. That's what I think we're going to do. But so this is why I'm not too worried if we do or don't hit the price targets that others have put out there. I think they've done great work and they have their reasons for it. I'm not going to I'm not going to bash them too much or anything. I'm not trying to bash anybody. I'm just saying this is my view. This is why I'm not worried about those price targets being hit. It's not how I trade either, really. I don't trade fractals. But just looking at this is what price would have to do to repeat 2013. We are on pace. We're way behind 2017 as far as price right now, right? So in this same point in November, we should be closing in at $100,000. This is properly scaled. So what I did is I took the July low, the mini bear market, the peak low that we had in July, and then there's some seasonality to this too, right? So all three of these cycles did have a low in July. So, okay, that makes sense to line up to me. Okay, let's look at the seasonality of it, not so much the cyclicality of it. So the seasonality of it is we had a July low. The summertime, there's the old refrain in equities markets, sell in May and go away. Well, I mean, this is pretty pronounced in crypto as well, right? Sell in May and go away. Sorry about that. All right. So then you take from that seasonal low, maybe not cyclical low, but maybe a seasonal low. You say, okay, let's look at the seasonality. What could happen in the season, the Bitcoin season, the November, October really through December. We've seen very strong price action, October through December. So fair enough to look at that. If you look at that from that perspective, we're behind 2017, but we're actually ahead of 2013. So in theory, if we got a strong enough buy catalyst and enough conviction from the sellers not to sell, in theory, we could put in one heck of a blow off top. The big problem with that is two things. One, the market cap size does start to matter. Two, we've seen clear signs of manipulation this cycle. This cycle is quote unquote different. This is a Wyckoff top. Like, this is a Wyckoff distribution all day long, right? Like, we watched in horror over here. I think we started all hearing about that this could be a Wyckoff pattern. And of course, most of us had heard of Wyckoff patterns before, but I always just dismissed them as, okay, it's human psychology and it's like a loose loosely defined pattern. I put it in the same category as like Elliott waves and stuff, where it's like, okay, it's a loosely defined pattern. There's so many ways to interpret it, and those type of patterns play out because of human psychology. But then I saw the actual Wyckoff distribution patterns, and I watched in horror as it like did exactly like what a Wyckoff distribution would do, and then we had this monster sell-off that made no sense. Well, it didn't make sense until China announced they were cracking down mining after the sell-off had started, and then they're like, okay, now it all makes sense. Okay. But you had Elon. Let's go to the 120 over here. Did I cut through that low? This is not right. The 120 was not down there at the time. I'm gonna weird. This chart does not have good data. Anyway, the 120 was way up here at the 50 something. That's really weird. Why is it doing that? But we watched in horror as this all played out exactly. So somebody somewhere, I don't know who they are, somebody had control of this market and was loosely controlling this. And, you know, when Elon announced that Tesla was no longer going to take payments over here, we kind of already started to figure out we were in trouble. And then it was China banning Bitcoin mining and Elon and everything else just really. But then it blew my mind to see this Wyckoff accumulation. And we watched in horror, more or less, or I did, because my view of the market was completely shaken of how the markets, you know, I thought there was not like one shadowy figure that controls everything. Well, there was somebody that controlled this and controlled this. So my problem with another blow off top is, given the manipulation that we've seen, I don't know exactly how that occurs. And I suppose it could. The issue is like what we're seeing here, what you saw in September. This was a lot of leverage getting built up, and then it's out of nowhere, just this boom slam. Of course, this was news that China was rebanning Bitcoin, of course, right? So that's right. That's what caused all this per se. But it was kind of like, okay, well, you've already banned Bitcoin, so. But I think the bigger threat, a lot of us were a little bit more concerned with at this point, was the effects of Hong Kong, because Tether. And a bunch of other big names were based in Hong Kong, and would Hong Kong follow suit? That was more the bigger concern to me at that particular point in time. But my contention is that as I watched in horror as exactly these Wyckoff patterns played out, I have to think to myself that the same people who were manipulating the market over there very well might still be involved. Maybe they're done. Maybe they just wanted to get out. But then the accumulation side, somebody was accumulating. So something tells me that we're in the final stages of accumulation right now. Unless we're in the first part of an early distribution. You know, I don't know. I'm not an expert in Wyckoff, but I'm just watching the market to see what's going on here. This is what price would have to do. My other big problem with price having to do this is the market cap does start to matter at some point, just because. Not so much because of how markets work. Again, this can happen if there's willing buyers and there's not willing sellers, right? If you have like basically no supply and price is just gapping up looking for sellers, and then finally up here somewhere, you know, here or here you find enough willing sellers that the market then starts to turn around, and then you have this cascade effect of people who were euphoric and holding. They start to see the price going down. They decide, okay, now it's time for me to get out. Or they likely bought on the way up, and now they're, you know, having to sell at a loss, whatever. So it can happen, but it's just not as likely. And again, I'm looking at the leverage situation. Every time, you know, we get this little bit of decline in price, we get, you know, leverage get built up, and then it gets slammed. You know, the market keeps getting slammed on this leverage. So that's another sign of manipulation to me. That's manipulation of some type is still going on. So. My thinking is that we're probably not going to see this type of price action because it's different. The market is different now because there are different players involved. The bigger the market cap matters, back to my point, the market cap matters because of the people involved. So human psychology drove these 2013 and 2017 peaks. 2013 was pretty much all retail and early adopters. And think about this. In 2013, Bitcoin had a market cap lower than Shib, Shiba Inu. Right? And it's way lower than like Doge and all these others right now even are. Right? So it had a much lower market cap. So this chart looks like a Shiba Inu chart. Let's go over Shib real fast. Let's see what Shib's doing today, by the way. I think it's coming down. Yeah. Look at the 2013 line. I'm just going to grab this for fun. Price can do stuff like this when you have such a tiny market cap and, you know, you get a lot of FOMO going on. This is what a small market cap coin will do. let's just grab this, copy it, move it back over here to this chart here. And we're going to make this line, this my little Shib, you know. Now we need to expand it because I just changed the whole time reference. All right. That's what Shib looked like recently. Let's put it over here, like line it up to something like this over here, right? This is what Shib just did. And let me put it to scale here for you guys. Let's just put it off to the side here. What I'm gonna do is I'm gonna properly scale it for you. Hold on. Let's go back to Shib. I grabbed a fractal from somewhere else. But let's just go for fun. So okay, from this low point over here, just say before it launched in September to the top, that was 1,164% in 30 days. 1,164% in 30 days. All right, what I'm actually gonna do is I'm actually gonna go over here. Let's just go find the 2013 price action. 16. Let's do this live for fun. 1,100% in 30 days. I just want to see how this lines up. All right, so this is the Shib price. Let's make it, what is Shib's color? Like orange, maybe? Let's just make it orange. All right, let's overlay this. What did I say, 1,100 something percent in 30 days? Let's just go do that. Let's go say, what's 1,100%? There you go. 1,100% in 30 days is what Shib did. All right, so let's go back 30 days. Now, okay, so 1,100%. We went a little bit higher, a little bit faster even on Shib. 1,100%. Pretty close though, relatively speaking. So this is exactly what Shib did from this bottom, just right now, just now, Shib just did this, right? It did 1,100% in 30 days. Take a look at that and look at Bitcoin when Bitcoin was almost the exact same market cap. Now, the point I'm making is that this is what price can do when you have a low market cap coin, right? And you can see if I just stretch this out just a touch, you know, how very close, especially this over here is. But you get the idea, right? This is what Shib did, 1,100% in 30 days. And Bitcoin did something very similar back when it had a similar market cap. And there was similar hype and similar. But you see the top, I mean, it's just, look how much that lines up. It's insane. Now, this is a little more consolidation on Shib than we had here, but, you know, this up, parabolic up, double top, and then you come back down. So maybe Shib's going to, look, if you want to follow price fractals, maybe Shib's going to have a nice little dead cat bounce here. You know, look at the Shib chart, but you get the idea, right? So, going back, let's color all that commentary back on this chart here, where I've got this. And so we know that Shib did a little bit, it beat Bitcoin in 2013. So 2021 Shib beat Bitcoin slightly because it did the same move in 30 days instead of like 60 days. So let's go overlay that right here. So that was the top. Say we go to max 2013. Let's go back 30 days. Let's go 1,100% in 30 days. I think probably from right around here is going to be right. That's 27 days, 1,100%. All right, so anchor at the top. Let's go find the bottom, 1,100% in 30 days. Right there. This is what Shib just did. And compare that to Bitcoin in 2013, right? All right. My point is this is the type of price action when there's not, this is retail that can do this type of stuff, right? It's just a bunch of retail people FOMOing into the same thing at the same time. Big up, big down. But what have we seen with Bitcoin? What has Bitcoin done since it's got $1 trillion? $1 trillion market cap is the space when big players start to matter, right? Let me just show you another chart. You gotta look at this. Think about it this way. I've got the market cap chart on here. Bitcoin started behaving drastically different when it hit $1 trillion market cap. I'm gonna show you. Where's the market cap one at? I can't find my market cap one. Let's just say 50,000 is the market cap of Bitcoin. I have a chart on here that just is the market cap one. I can't find it right now. All right, let's just use this FTX chart. So let's say 50,000, right around 50,000. I know it's not exactly 50,000, but we'll just, for the sake of argument here. It's right at like 52 or something. It's over here somewhere. Whatever, doesn't matter. This is the $1 trillion line. This is where institutions get involved, and this is where retail's involved, right? So retail is predominantly involved down here below $1 trillion. When it gets above $1 trillion, guess who starts to play, right? All right. So you look at this. This is normal. Bitcoin going parabolic. Then all of a sudden, you get above this magic line, and Bitcoin starts doing weird manipulation things. This was retail. These are big boys. Right, so just think about that too as we head into the next second half of this price action. Just all this is how I think about it. I hope this is making sense and helping. But oh wow, CEI! It's been a long time since I heard about CEI. I used to trade this. I used to day trade CAMBER Energy. It was one of my day trading things. Yeah, that was fun over here. What was this? Oh, I haven't been day trading that in a long time. Where's CAMBER Energy? This thing was a great short back in the day. It was like tanking. Yep. You had all these people that were just like, CAMBER Energy is going to bounce back, man. Just short these pops. It's been a long time since I looked at CAMBER Energy. Goodness gracious. It's starting to want to put in a bottom over here at like $1. Yeah. Well, it's starting to put in a little bit of a bottom. I might turn around here a little bit finally after all that time. Somebody on your camera. $1 trillion market cap is not that big, and the stock market just one company between 1,000. Yes, Taz, I agree, it's not that big, but different people are involved when it hits that level, right? Before, when something is below $1 trillion market cap, a lot of the big money managers, they can't put any sizable amount of their portfolio in it because it doesn't move the needle for them, right? If they buy, Warren Buffett talked about this. All these big investors. If you've got a company with a market cap of $100 million, they could buy the entire company, which would drastically alter the price. And if the company did fantastic, it really wouldn't move their multi-trillion-dollar, or hundreds of billions of dollars portfolio that much, right? They take a $100 million company, it does fantastic, it goes to $200 million. For you and I, that sounds great, but for somebody managing $500 billion, they didn't even move the needle. So they have to invest in things that are massively bigger to be able to move the needle. And they have to have the liquidity. It has to have the liquidity for them to get in over time and then get out over time. And it has to have, it has to be able to move. They've got to be able to put a couple of $1 billion into it and see it appreciate. And then, so they're looking to allocate billions or tens of billions or hundreds of billions of dollars even. And those type of players don't mess with things that are under $1 trillion market cap because they just can't, they don't get a return on anything that small. It's like a really good example would be, if I got you all excited about I'm gonna stand up a new lemonade stand or a bubble gum stand, right, or whatever, right? And you can I promise you these bubble gum. I know it's 5 cents right now, but it's gonna go to 50 cents. That's a huge gain. This bubble gum, I'm telling you right now, I can sell you 1 or 2 pieces of this bubble gum. Like, well, I don't care about buying 10 cents worth of bubble gum and turning it into $1. Right? That's not what I'm going to focus my time and energy on, right? You're going to focus on buying a crypto asset that's currently got 100 million market cap that could go to $1 billion market cap. That's what you and I are probably more interested in. So, buying 5 cent bubble gum to make a 10x return to 50 cents doesn't interest us. Same thing's true of the market. If you've got a lot of money to manage, buying 5 cent crypto coins and seeing them, go to 50 cents, you don't care. You don't care because, a big money manager could by themselves make a small coin market crypto go from a penny to $10, but they can't get out because they're the one that caused it to go up. So as soon as they start to sell, maybe they, there are players out there who are doing this that are causing things to go up that are then exiting as much as they can at the top. But you get the idea, right? They don't care about these assets until they get big enough for them to move the needle for them. And so this magic line over here is where people started to care. This is where big money managers started to care. Above this line, money managers start to care because they can see a return on their money now. This asset's now big enough that if I buy into it and it moves, I can now see it. I can put enough money into it. So if you were one of the big boys that wanted to get in and you saw this price action coming up here, you'd have every reason in the world to try to help the market get back down here for a while so you could accumulate and push this thing back up, right? Just saying. Just think about it. All right, let's get back to comments here. We haven't talked about small caps. I'm on Bitcoin all day. We had Multivac we were talking about, Nexus and their big plans, AZERO. $1 trillion market cap, yeah. So I know you're an Elrond enthusiast. What are your realistic targets? Maybe interested. Fib. Okay, let's look at Elrond. It broke out. Let me give you my fib targets on Elrond. I already had them on here, right? So this is based on the weekly. So you see right here, I'm just gonna, where somebody in the chat goes, "It's not right. You can't do a fib level like that. You had a red daily candle." Yes, there's a red daily candle, and this is based on the weekly actually. And if you go to the 3-day, you can see that's 6 straight days of up, 1 3-day down. So it is valid. Grab at me. All right. So this is my fib extension level. This is that last impulse. So what we do is from a fib extension level is you take the prior impulse, the move up, the move down, and then the resumption out. And what you want to do is you want to anchor at the bottom of the impulse, the top of the impulse, and the bottom before it reversed, right? Okay, so we've got that. Here are my current fib extension targets before we get a reset. Now, again, this is not the end-all be-all. What happens is you'll have price do some stuff, and you'll be able to draw new fib extension levels. But based on this next impulse, our standard 1 deviation was basically right above the prior high because we hadn't really moved. Ultimately, this impulse was we moved up and came back almost to the exact same point we took off from, right? So it's not a whole lot. So the standard 1 deviation is barely above that price because what that 1 deviation is it's the difference between this low and this low above that high, and it was very small. So, but we broke out above that high. So now the 618, the golden pocket, the main fib that we look at when we look at these fib extensions, the 618, so 1 standard deviation plus the 618 fib is currently sitting at $343. That's our next price target on the fib extension levels, $343. This impulse can just consolidate there and keep going all the way to 400, to 500, up to 540. Now in crypto, they do have a tendency to get out outside of these at the most insane pumps. Now Elrond, at this stage in the game, who knows? With Meyer coming live, it could have a pump like this. But what you're looking for with these fib extension levels is you're looking for which resistance is it going to curl over at. How do you identify that? How do you figure out which extension, which level you're gonna curl over at? Well, you're looking for it to come in and act as resistance. A key indicator that it's going to happen is you come in, you hit it, you make a low, you hit it again, and you make a lower low. So you hit these highs, and especially this is a lower high, and then this lower low over here, this is your clue that this is now going to act as resistance for a period of time. May not be out forever, but likely it's going to want to find support. So maybe it'll head back to one of these lower fib levels before resuming, right? So that's your first clue that you've hit resistance, is you start to see that price action. An easy way to try to identify that too as well is to draw yourself that breakout parabolic trend line. And an early indicator that you've hit resistance is that when you come into that and you curl over and you lose your parabolic trend line. So a good example is if we start trading like this, we keep bouncing off this trend line. As soon as we hit this and then fall under and do something like that, then that's when you know in this area somewhere in here, as soon as you can identify it, is that, okay, this level is going to be the one that's going to be resistance, and we're going to come back and find support somewhere else. And so, it's a matter of if you identify this, if you get like a daily close or a 12-hour close or some significant close below this, if you can, on the next bounce, this is a great place to trim some with the purpose of buying back when it does find support. That's how I play it, right? That's how I do manage my crypto trades. But the biggest thing is, the simplest thing is that as long as you're making a series of higher highs and higher lows, you just keep riding that trade. You just keep riding it until that trend stops. And when that trend stops and you make a lower high and a lower low, then either you're in for some consolidation and you plan either a full exit or you plan some profit taking. And you can always re-enter when it resumes, and it'll almost always it'll find support, hit resistance, consolidate under resistance, and then maybe even back above resistance and take off. Consolidating below resistance looks like this. You come into resistance, you make a low, you make a higher, or maybe equal at high, but you make a higher low. And you keep doing that, right? And so these, it can be a wedge. So it can be, you come up, you make a low, you make a lower high, but a higher low, and then a lower high, and then a higher low. And that gives you some structure to work off of. Okay, when price action breaks that general trend, then you know you have a breakout on your hands, and you can play that. So, all little tips about how to manage. On Elrond here, he's just in full breakout. This is a hodl bag for me. I'm not actively trading it, so I really don't care. I'm just going to watch it and let it go. Why is my dog losing his mind? I don't know. 1 second, guys. All right. Do you believe it's late to buy Elrond? Yes. Yeah, I do. At this moment in time, probably late to buy Elrond. But I mean, you can still trade. At this point, you'd have to trade it. Like accumulating it, you want to accumulate on the dips, right? You want to accumulate when everybody else is scared of something. That's just the truth. So you wanted to be accumulating on these dips over here. Like I haven't bought Elrond since these dips, so I've been buying the dips. There's no way I'm gonna buy Elrond up here for a long term. Now I'll trade it. Sorry. If I was looking for something to actively trade, if I wasn't already dealing with other trades, this would have been a good entry right here, right? A 4-hour entry. So I broke this resistance level, came back in and tested a support, and then resumed off of it. And what's great is what I've gotten to prefer doing in crypto is actually waiting for it to retest the support. And that way I can put like a really tight stop. It either needs to bounce or I'm out, basically. It's basically how I've been doing it more lately. It's just I buy it coming in support, and if it doesn't take back off immediately, I get out for a next to zero loss. But in this case, it's coming back into support right here. See this 4-hour? This is a 4-hour Heath level support right there. That's probably where it's going to want to find support, and then it might resume off there. If you're looking to actively trade it, you know that's not the worst play in the world. You know you're wrong pretty quick here below this trend line, right? So this is going to be a false breakout, and Elrond is going to turn around on us and go back down. What's going to happen is if you buy right into here, you'll see it maybe make a weak bounce. And then, you know, if it's not a very good convicted bounce and it falls below, as soon as it makes that bounce, you can just move your stop loss to break even. That's what I do all the time. If it just slams and goes right back through, you know you're wrong under this wick right here. You know, it's probably now going to find, it's going to turn a lot of this into resistance. This is going to be a false breakout. So if you lose this 297.70, let's call it, if you lose that level, you're below this breakout trend line I've identified here. Let me fix my breakout trend line. You're below that, and you know you're below this support level, and you took out the low of this where it found support before. So this is support now, but if you were to lose that again and wick below it, you're probably going to have to find lower support before you resume back up. So, you know, I don't think it's too late to trade it, but I think it's too late to buy it. Yeah. Because the reason I say that is because I know it's going to happen. I already know it's going to do something crazy. If you're actively trading, why is it? It's going to do something crazy, and then it's going to do this. So I already know it's going to come back here at some point. So I'm not worried about it. I'll buy more when it comes back here, because it will. And everybody else who's buying now is going to freak out and sell. That's why I say it's too late to buy. Because what's going to happen is even if you buy now and you're up and then it comes back down to 340, say, people are going to freak out and sell at a small profit. This is going to take back off on them. I'd rather be buying coming into 340. Like, okay, let's see if it, and I look for those signs. Like, is it starting to put in a bottom here? Oh, look at that. It's starting to put in a bottom. I'm going to buy right there. Maybe 380 is when I end up buying, but, you know, you don't know it's the buy. You can't catch a falling knife. It's just impossible. You just don't know where the actual bottom of anything is going to be because there's just so many short-term forces that you can never predict. There's liquidation levels and leverage and algos and, you know, just fear, and price can do really unpredictable things in a very short time frame. So, all right. I have been doing that and getting wrecked, even in breakouts. Okay, doing what? I don't know. Have you heard of the project CQ? So I'm gonna tell you this: crypto trading's been a little bit rough lately, honestly. You know, I've been having a tough time because it's been, how do I put it? Like, this is great buying into the 20 right here. Would have been a good time to maybe add to Bitcoin, for example. But with the leverage and everything, it's been so it feels manipulated. Just because, and I'm watching the leverage build up and then tank and all this other stuff. This over here, this is where I was like, all right, they're definitely playing a leverage game. I was getting concerned, but I thought, okay, maybe leverage is just chasing this price action and volume. But we all knew that the end of September could be rough. And this is where I was like, all right, they're definitely playing the let's wipe out retail and leverage game over here. So, I just don't know. With that said, it's been a little bit tougher because when I'm trying to gauge what the level of manipulation is, I really do think we're in the later stages of accumulation. So at some point, if this is being manipulated and if this is still accumulation, they're going to be done accumulating and they're just going to let it rip, right? And then they'll start distribution at the other end of the rip. So the rip will be lower. We'll get a sell off when people are expecting it to go higher, of course, and they're all going to get wrecked. And then when people are freaking out, thinking it's gonna keep going down, it's gonna turn right around in their faces and go back up, and it's gonna do a whole bunch of unpredictable distribution style price action. It's gonna look something like this, right? So, and not like this. With crypto, so crypto does typically, like this is retail buying crypto, buy the dips, and it just keeps trucking upward until it crashes. This is Shiba Inu and Doge and everything else, and all of a sudden it just does this. This is what we know crypto as. What crypto at over $1 trillion, this is what I think crypto is. Right? So there you go. It's a subtle difference, but it's a difference. All right. Let's talk about these projects here real fast. I'm going to wrap up. All right, so Multivac, this is a chart. There's something, I just started looking at these last night. So this is based on this thread. People started commenting. Like, I got a bunch of really good comments. Thank you all so much for the fantastic. I got just an absolute, people love their small caps. I haven't even looked at these two. Most of these, honestly, I've heard of. I was a big fan of IOTA, a couple years ago, so forth and so on. Litany I've already talked about in previous videos. Several people asked me about Charlie 3 on Cardano, the Oracle on Cardano. I did a video about that already. A brief video. It wasn't like a in-depth of Charlie 3 per se, but a lot of those projects don't need a full in-depth breakdown. You just know that it's the primary Oracle being built on Cardano. That's all you really need to know about it, right? So if you think Cardano is going to work out well and you're bullish on Oracles, there you go. That's all you know in your thesis. There are some interesting things about it, though. Multivac, though, the big thing is this all-dimensional sharding. I need to find out what they mean by this. Is this marketing, or is there something real to this? My guess is this is more marketing than it is some kind of, significant breakthrough. That's my skeptical guess right now. Nexus, they claim to be redoing the entire internet, including the infrastructure side. They want to replace ISPs. So if I do a decentralized internet, this is a huge claim. Sounds very outlandish to me. I'm just going to say that right now. So providing an alternative to ISPs. So maybe, okay, so if they're I read that wrong earlier. So they're providing an alternative to ISP. Maybe they're not trying to replace ISPs. Maybe this is just a way that the community can kind of build some of their own bandwidth on the side, which makes more sense. If that's the case, then okay, fine. They've got some tokenized satellites. It's a lot of CapEx. Anytime there's a crypto project that has this much capital investment, I'm very skeptical because capital businesses are very, very tough. Like the last really successful one was Tesla, and it's a capital-intensive business. Most companies that are doing like the tech giants, they are very low capital. Google, Amazon, Facebook, they run a monster business all in software with very little hardware backing it. Maybe Microsoft and Apple, but Microsoft is still predominantly software, and Apple, they build, really good endpoint hardware, but they're not dependent on this very expensive in-between infrastructure. They don't build internet infrastructure or satellites or things like that as their primary business. I'm sure they have stuff like that on the side that they do. I don't know, but they build phones and PCs, and so it's still mostly software. 90% of the revenue, I guarantee you, is software. So I'm concerned when they're too connected, when a project is too connected to CapEx. It can work, it can be huge. There was that wireless project, I forget the name of it, Helix or something like that, Helios. That's got the wireless, so you can buy yourself like an access point that does 5 gigahertz or 5G, not 5 gigahertz, but basically provides cell service, I think. All right, and then on their blockchain side, some big claims here. This is cool. This is not a claim. This is truth. Their algorithm is indeed quantum resistant or post-quantum world resistant, as far as we know. It's called Falcon. Now the problem is an Argon 2. So they got, okay, so it's I thought I just knew about Falcon, but Argon 2 and Keycac. I don't know if I've read up on this one. Oh, this is not ringing a bell. Winner of the SHA-3 competition. Okay. So I'll have to read up on these. Falcon is in that post-quantum cryptography NIST. So NIST is a big organization that does a lot of security framework stuff. I knew about Falcon through NIST. So I'll read up on these others and see if this claim adds up. I would bet it does. I mean, it's not quantum resistant cryptography is not like any super crazy thing. It's just there's been a lot of work on building quantum cryptography. It's just a matter of like Bitcoin hasn't had a need to move to quantum resistant cryptography. We're doing Taproot and the North signatures, but the next upgrade probably needs to be to a quantum resistant cryptography for like the Bitcoin and Ethereum and all them. Three-dimensional chain, I do not know what this means. I have not got my head wrapped around what on earth they're talking about this. Similar, you see this all dimension, this multi-dimension is a topic now. So kind of when I read through a lot of these new projects coming up, this multi-dimensionality of the ledger of consensus, namely on top of the ledger, is kind of a theme that I'm starting to see. Feels marketing to me, but I'll get to the bottom of it and see if these pass the muster. This one is super interesting. It hasn't even launched yet. My problem with it is, so this is yet another DAG-based, directed acyclic graph-based ledger. So it's not a blockchain. It's a DAG that's building a decentralized ledger, this directed acyclic graph. But they also combine zero-knowledge snarks and SMPC. I don't actually know what that is. I'll have to look that up. But these zero-knowledge snarks, this is just a scaling mechanism. So they're doing some zero-knowledge proofs on a DAG. It's kind of like their thing, I think. So it's kind of like combining a layer 2. It's kind of like, what Cardano's doing with Hydra. It's like they have their base layer, and they have like a pseudo layer 2. It's not really a layer 2, but it's kind of a pseudo layer 2. Side chains basically that are doing scaling. This looks to me like it's a DAG with some zero knowledge proofs to further scale. So, or maybe this is part of the core consensus. I don't really know. But my problem with when I looked at this one was they're entering this highly competitive space. So what I asked one of the guys that responded to the thread in here. Somebody actually responded from this team and said, hey, look at our white paper. And I was already actually reading that white paper. But they said, hey, go look at, where it was over here. This page is what they sent me to. What I asked them, though, is, can you give me a shortcut here? What makes you different? Like, just point me in the right direction of what to go read about. What is it that makes you different from a Hedera hash graph or Nano or IOTA? Because I'm not seeing it. The zero knowledge part, this is not anything super special in my opinion. I mean, we've been doing this for, zero knowledge proofs have been around since like the 60s, as far as I know. This is nothing really super new here. It's probably around since the Greeks in some form, I guarantee you. All right. What's the difference between a DAG and a blockchain? Okay. I did a video on this. As simply as I can put it, let me try to make it simple here and find a not busy chart. I'm gonna doodle. A blockchain is you take some transactions, you find a combination of transactions or whatever, and you put them in a block. So you pull out of the mempool you have this little bit of memory. A transaction's waiting to be written. You pull those out of the mempool, you put them into a block. The miner who wins the block signs this cryptographically. That's a little key for signing it cryptographically. So you got a bunch of transactions signed cryptographically, and the next block that comes along, the next miner that mints the next block, pulls more transactions out of the mempool, transactions that are waiting, validates a subset of those transactions, and then he also signs this transaction cryptographically with his key, but he also links it to this prior transaction, so they're linked together. So this block, in order to alter anything in this block, you have to completely redo this block, right? And then so that locking together over time, and this is a different validator in theory with a different key, but he links cryptographically to the prior block, so forth and so on. So the longer the chain gets, the more secure prior transactions get. So this is, Bitcoin transaction 1 is pretty much etched in stone at this point. It's never going to be changed in 2 and 3 and so forth. We're at block, 800,000 or something now. I forget where we're at, but so these blocks are all linked together, cryptographically signed and linked, right? All right. And this forms, what you can do is a computer can come along and he can read all this data. He can download the chain of blocks, and he can go back and say, okay, I can calculate everybody's current balances. So wallet A, wallet B, and wallet C, maybe they've all had transactions through here. Maybe A, B, and C all started with 10 Bitcoin, and they've done transactions to and from each other. I can go see in every block what the transactions were, and I now know that A has 5, B has 20, and C has 5, or whatever. I don't know. And that's the end result after they all started with 10. And after all the transactions that have been done, this is my current ledger balance, right? So A has the right to spend 5 coins on this blockchain. On the next block, A is allowed to send somebody 5. That's it, because that's what their balance is. That's their unspent transaction output for Bitcoin. All right, a DAG works differently in that it's more time-based, and it's a series of transactions that are orchestrated by a external graph. It's more external to the system than endogenous to the system. Okay, so you have participants, A, B, and C now. Say they all start with 10 coins of some type, right? We open the ledger. And what they do is they write transactions to each other. So at this time, and time stamping is very important in a DAG. At this particular time, I'm going to put a line here for the time, or T for time. At this time, A sent B 2 coins. And at a different time, maybe a few seconds later, maybe right before, it doesn't matter, he also sends C 3 coins, right? All right. So, and you can have different participants that are constantly sending, different values to different players. And the DAG is taking a history of all of these transactions. A talk to B, talk to C, and it's building this called a directed acyclic graph. So it's a one-way graph. So now I know that after this transaction, at this timestamp is very important. After this point in time, B no longer has 10, he now has 13. And I know, based on this transaction, this time, that any time after this point, A can only send 3, or A can only send 7. But A is also sent now at maybe a different time. A sent 2 here. So I can record after this time and after this time. I now know that A has only 5 left. And so if A sends another transaction over here, if somebody sends, or if A wants to send a fresh transaction to another participant, to make this, okay, so this guy now, maybe this guy over here started with 0, and we both sent him 5, right? So now A is down to nothing. A is at 0, A is wiped out, and then now the new participant, D, has some coins. This is all recorded in a time series pseudo database, but it's not a database. It's all linked by participants and time stamping. And so now we know that this D character has 10 coins to spend. And so D can now send, and it's a one-way graph back to A, and it forms a new point in the graph. So A is now receiving coins for the first time over here, forms a new point in the graph. At this time, D sent to A 2 coins. So now A, after this timestamp, has the ability to send 2 coins, all right? So it's organized, but the problem with this is that it normally, in order to do this type of graphing, you need some type of orchestration, external orchestration typically. This was a big problem with IOTA, is they had this coordinator node that was organizing all these, and they have recently done this thing, they've killed this coordinator node. But the biggest problem with DAGs is, how do you do this totally decentralized? How do you have a totally decentralized consensus around this? It's much faster and much more efficient. You don't have to wait for, you don't have to wait for a miner to validate transactions sitting in a mempool and lock it up in a block. You can continue to march down the ledger, and ultimately this whole graphing process forms a ledger. It just forms a decentralized ledger, just like blockchains do. At the end of a blockchain, a chain of blocks, at the end of those chain of blocks, the end result is, the output is a ledger that says A has 2 unspent Bitcoin, B has 3, C has 5, and D has 10, right? This is the result. This is the decentralized ledger, is the result of all this over here. The result of all this over here is also a decentralized ledger, but it just does it in a different way. It uses graphing technology and timestamping to build this decentralized ledger. So it's a different way of achieving the same end result. But the problem is this is much easier to decentralize. It's much easier to have it's more figured out, I should say. Maybe not easier. But how do you build a decentralized consensus on this blockchain to come to the result of this decentralized ledger is a lot more figured out than how to do the same thing fully decentralized on a DAG. And so a big part of when you see the marketing around most DAGs is they do spend some time focused on how do they properly decentralize. Now if I go back over to Aleph, you'll see here one of their key things is we are properly decentralized. Decentralization is a key component. Aleph Zero is the first decentralized directed acyclic graph based platform with a large rotating random committee. So this is what I asked them in the thread. I just took a screenshot of this and said, is this what you're saying is the key difference between you and IOTA and Hedera and all of them, is that you have this rotating random committee. And I don't know what that means yet. I haven't read up on it. I have no idea how they're doing this. I have no idea exactly what it means. But that appears to be the main element. You have to go over here, value prop. And this one, if they've cracked the nut, and if they're the first ones to really have a proper decentralized DAG, that's where this is a small project with big potential, right? That's where the big potential comes in. If they can live up to this claim. The problem is they're competing with some other giants in the space, and it's a very competitive space, and they've got Hedera Hashgraph and Nano and IOTA they're competing against. And of course, a Nano, IOTA, and Hedera Hashgraph all want to be able to say, and will all claim, that they are decentralized and or they're moving toward decentralization. Another small thing. Every single crypto project is centralized at first. Bitcoin was centralized. It was just Satoshi, and then eventually Satoshi and Hal and a few people running it, right? It was very centralized. But over time it becomes decentralized. So there's a bootstrapping process. That's the process of taking something that a small group of people have worked on and then bootstrapping that to where the rest of the world, a global network of people, is running that. So during that bootstrapping process, there is a lot of centralization until it gets fully bootstrapped, and then you can let go of the reins and let it be fully decentralized. Well, that's what's happened with IOTA. They had a lot of centralization elements as it bootstrapped. Hedera, Nano, none of them are different than that. So Aleph Zero is going to have to be somewhat centralized while they bootstrap the thing. It's going live in a couple of days here. But, their claim is that they're going to be more decentralized than the other DAGs. If that were to be true, that would be a significant, differentiators, and we'll have to keep an eye on it. But I have not spoke about Ergo. Ergo is super cool. The NEPA POW, it's a proof of work, a very efficient form of proof of work that they're using. And they're working with, obviously, Ergo is its own blockchain, but they're building a DEX on top of like Cardano, for example. I think it's some of the bigger hype around Ergo is the DEX that they're collaborating with Cardano on. But NEPA POW is super cool. That's another topic from the day. These POW, what's cool is to see how the proof of work community is going to work, pun intended, to improve the efficiency of proof of work such that it is somewhat competitive with proof of stake. Now, it will never be fully competitive with proof of stake, probably. You'll have some trade-offs, different trade-offs. So like Solana is technically a form of proof of work that is very rapid but very centralized. So that's our trade-off. But anyway, nonetheless, what about Tesla's price action? It looks like it's going up to me. Unless I looked at it. Oh my goodness gracious! Look at Alan. Alan P is not on with us today, but he'd be super excited. This looks like a exponentially growth company. That so, you know, over here the question was, would they be crushed like a bug by the big players? And it kind of became apparent that they probably weren't, and now it's become readily apparent that they're not only not going to be crushed, that they're the ones doing the crushing. So that, I mean, that's all that's happening. It's the market. This is market dynamics 101. This is people no longer willing to sell. This is people willing to buy now, and nobody's willing to sell. What happened was a fundamental shift in the understanding of this asset. Over here, when you had this little bit of a pop and move, you had people that really believed in the company, but a lot of people that thought, no. Volkswagen and BMW and Ford and all them, they're not going to let them just dominate the market. They're going to come out with their own electric blah. This is a lot of smoke and mirrors, so forth and so on. And then it kind of, okay, well, maybe it's not so much smoke. Maybe they're going to carve out a niche. And they got their S&P 500 included. Maybe they're going to carve out a significant niche. But you know what, maybe not. This, that, and the other. FUD. What happened right here, that earnings call, was it has now become apparent that Tesla's not only not going to be crushed by the bigger players, they're the ones that are going to do the crushing. They're the ones that are going to rip the hearts out of the legacy industry and probably emerge into the size. That's why you have this. Their valuations obviously way over any realistic, you know, earnings for today. But this is a shift in understanding of the asset, and a shift in the market's understanding of what this is. This is no longer a electric car company that has a lot of way to go. This is now the company that's probably going to replace an entire industry. Right? That's the shift. That's the shift, and that's when you get this type of price action. But then you'll have inevitably, you know, something's going to happen. It'll come back down. See these trend lines right here? Odds are, where are we at on the moving averages? The moving averages is going parabolic. Everything looks good. Odds are, when you see this type of parabolic move like this, you're going to come. My money would be, well, somewhere over here. You're going to find Tesla's price again. Let's see here. Yeah, you know, you'll be back at 900 at some point. You'll do this. You go up. That's my opinion about Tesla's price action. And then something else will happen. So that's, you know, that's been working out pretty good. Up, back. That's how markets work. But, you know, as long as Tesla continues to look like it's going to be the dominant player, at some point that'll all be priced in, though. And then you'll have this equilibrium. And then it'll look more like this over here for a period of time. Right? When you reach that equilibrium, you're going to have a period that looks much more like this than like what we've been seeing. This looks like a Wyckoff distribution. All right, everybody, I'm gonna wrap up. Oh, Tesla in regards to large cap manipulation by large players. Well, yeah, it's a good point. This might look over here. This looks like a distribution to me, kind of, sort of, maybe. I don't know. I'm not a Wyckoff expert. I don't. This look at this. This is, oh my God. This is Bitcoin, right? Look at that. But it didn't have a huge crash after the fact, so you know it went right back up after this. Somebody's maybe attempting to manipulate it. I don't know. But this happens a lot too, where you have like, and I really don't care because what I use at the end of the day. I got my moving averages here. The 200. Like I would care much more about the 200 on this type of thing. I don't care about all these lower ones. Above this moving average is good. Below that moving average, not as good. And then traditional trend lines and things work really well. So, as far as manipulation of it, yeah, I mean, it's a different beast because it's an exponentially growing equity, and so growth equities typically look at the Nasdaq. Here's what growth equities do over time. Right, this is the Nasdaq. This is the Nasdaq chart from a long time. Remember the Y2K crash everybody freaked out about? It's like a blip on the radar now, right? And this is a big crash. This was a big deal. This was huge. I mean, we went from 5,000 down to 800. That's insane. That's a huge move, but that looks like a blip on the radar. We're up at 16,000. So this is just what, you know, exponential growth equities big up, big down. This is the market pricing in. And then you have a big up, you're going to have a big down at some point. Of course, there's too much money printing, so the big down might come after, you know, we're way the heck up here for all I know. You never know how high these things are going to go, but with all the money printing. But you're going to have a big move up and a big move down. And it's going to keep marching up over time. Exponential growth equities do that. Just march up. So this is also, I've been saying this for a long time. Bitcoin may eventually start to look more like NASDAQ and less like, you know, Bitcoin, because it's an exponential growth asset that just, it's relentlessly bought over the long term, right? Especially this part of the chart. We had these big spikes, big drawdowns, but it just keeps marching on. So that's this is what I would not be surprised to see a Bitcoin chart look like over time. It's just this kind of gradually increasing, you know. And you see here, back to your like whole this exponential curve. It's probably going to come back to this curve at some point, and then something will cause it to reset this curve, and we'll go sideways for a while. You know, it's just the way things work. All right, guys, I'm gonna take off. Oh, God, one more theta. Obviously, I've done some work on theta in the past. Into resistance there. Got a confluence of trends here playing out. This is definitely a bottoming pattern, though. You know, it's trying to bottom. It's trying to break back out here. This looks like a billion altcoins. This looks like a lot of crypto. Just general consolidation here. Yeah, I mean, on a this is a 3-day, on a 12-hour time frame, back above the 50. Yeah, it's wanting to break out over here. You know, this is the key level. Obviously, I had these levels drawn in here for a long time, 6, 7. You know, below it, good. You know, buying opportunity for the long term. Buy these dips if you're a fan of this project. But now, from a trading perspective, you want to buy momentum, right? And you want to buy in an uptrend. And so it's kind of starting to reaffirm the uptrend, but it really hasn't. It's still very sideways from this point. But you're starting to get the first signs of an uptrend. So if you can get, let's look at this. Here's your resistance currently, your Heath level daily resistance over here. And then that support still works for me. You just hit that support basically on this breakout. So this, I mean, this is a good entry here pretty soon. If you want to trade it, you know you're wrong pretty fast, right? Upside is, you know, I don't know, $8 initially, but you know, ultimate upside, you're going to be looking for like $14 on this at least, something like that. $12, $14, and your downside is $6. So if you buy at $7.50, your downside is $6, your upside is $12. It's worth a shot. All right, I'm gonna take off, everybody. Take care.